Good morning, guys. Welcome to this Tuesday, January 21st, day after inauguration. New sheriff in town. Let's see what happens. Market's reaction, the little baby day we had yesterday was a little to the upside. Ended up with a pretty good little flush here at the open. It's a little reaction and then right back up again. So we're still back up at that 60-50, holding well above that 6,035 to 40 resistance area. So did you see that was a pretty good run down here in the overnight, right at the get-go. It was at the Asian markets open that whole thing happened. So we'll see. There's going to be a lot of cross currents going on the next few weeks. So I would just trade that with a bit of caution and be prepared for some cross currents, some volatility, and some unexpected reactions. So as people digest these executive orders and what's coming up next. So, but we are on our way. At least we are past this past debacle, this last 4 years of debacle. Anyway. Looking at the news this morning, and there is pretty much nothing. No news to drive the market at all today. Tomorrow we get a little bit. The leading indicators at 10. Jobless claims on Thursday. Pretty light news week today. Consumer sentiment on Friday. So a pretty light news week altogether. So it's going to be interesting to see how the market reacts. I think there's going to be a lot more of these political, not political reactions, but reactions to the change in policy. It's probably a better way of putting it. Excuse me. So starting off on the ES at this point, I'm just going to start off range bound with a slight bias to the upside, to be honest with you. If they hold at where they are right now, and especially that London low at the 6,038 to 40s, I think we are in a good spot. Potential trade is higher. It could go either which way. It's hard to say. The reaction, I think the default reaction is probably to the upside, but it's not necessarily just because a change in policy. It's more of an outlook thing, I think. So we'll see how the markets react and digest the news. Would not be surprised if we get a fair amount of volatility both up and down. So let's trade it as such. So starting off, looking to buy weakness at this point against the 6,050s, the 40s for rotations back up. Below 40s, I'm going to go back range bound, fairly aggressive on that. Basically buying weakness, not going to be more aggressive than that. Just given that we are trading pretty much right at this edge, and if they start trading below it, we can run down to this lower area pretty darn easily. So we've just been up here for a couple of days. I think it could be just as well emotional reactions in the market than more than anything else. And as you can see here, the little flush to the downside we had in the overnight, that was something. So if you had stops in the market here in the overnight, all those could shake it out and then some. And then we'll see. They took it all the way down here, right into that 88 level, that little attractor, and then bounced right back up again. So crazy action on that stuff. But the way it looks to me is like we have a good shot at potentially trading higher. So I'm going to start off with that bias. Watching that 6,040 level. If it starts trading below that area, start retracing back down here towards the 15s. I'm going to go back range bound pretty quick. And not necessarily going to start thinking about the short side of the market too fast. And they're going to have to back off a little bit more than that. So if they back off below the 40s, I'm going to just assume they're back in this lower range. And there could certainly be a short bias in here for a rotation back towards that 59, is this 95? Yeah, this the little mode here in the let me see what that is. That is the on the F1 with a little bit more data. That is at 88. On the shorter term chart is at 15. So around about this area is where you have value, right? And right, if you start running back down below that area, the 85s, I would say probably is a good gauge for that. I would start worrying about the short side at that point. But all these areas right here, I would be looking at buying them with some caution. And if they trade back down below that 40s and starts pushing lower, trading back up from there. I would be looking at getting short against the 20s and the 30s, so 20s and the 40s, but that just implies that we traded back down first. So a few different options to go, but starting off, looking to buy weakness, 50s, 40s for rotations back up. Below 40s, take off the long bias, go back range bound. Still looking for buying opportunities on the way down here if they start retracing, but a little bit less aggressively, thinking just range bound market. All right. Now, if they hold here and starts trading higher, I would just stay on the long side and look for buying opportunities. Potentially short setups against the 68 to 70s, against the 75s to 80s. Not going to be super aggressive on them. And if the market starts a little rally to the upside, I think the better short is going to come up here at the 6100. So that four-letter edge at the 95 to 100s. Here's where I think you find good resistance again. So we may have a little bit of a move to the upside here before we run into that resistance. So we're not going to be super aggressive on the edges in between. Intraday, there could certainly be short setups. I mean, here's your attracted little volume edge. Here's your little volume edge. So on the way up here, there could be short setups in here all the way up to 95s to 6100s is going to be the better one. I'm just going to be a little bit less aggressive on them, looking for decent setups and triggers, and then let's see what happens with it. So that's kind of the way I'm going to trade this. But definitely, if the market gets up towards the 6100s, that's when I'm going to be looking more aggressively for a short setup and see if they can hold the line there. And if that comes out, bets are off. We're heading higher. That's kind of how I'm looking at this. So we have if we're going to see new all-time highs, they're going to have to take out the 5960s, but they have to get past that edge, the 6100 first. And then we don't have a whole lot after that. So they can go pretty quick to the upside if they start taking out this edge at the 6100s. And that's this edge right there. That's a pretty clear volume edge in your chart. So that's how we get started on the ES. Looking to buy weakness, fairly aggressive with taking off that long bias if they trade below the 40s, but then we rotate right back into this lower range. I would just give you, as I said, I'm going to take off the short bias, oh, sorry, the long bias, but there's always this level, one level below the obvious. Excuse me. When they run it one level lower to really get you going and then start reversing it. So I'm taking off the long bias at the 40s and still looking to buy all the way down here to that 59.85 level and see how that's going to hold up. So that's how we get started. Let's see how this whole thing develops now with all this potential cross currents we're going to get. All right. So that's the ES to get started. Looking at the NASDAQ and the bonds. So the bond market, nice move to the upside in the overnight. So they liking what they're seeing up to 114s. And that just means the yields are coming down a bit, and that's helpful for the market. So maybe this was it, 110. And now that they've taken out this edge, the 113s, and are trading above it. So that's a good sign, I think, in terms of long-term yields. So at least the yields are not kind of falling out of bed, heading higher in a big clip there. They could still head lower. I mean, it's not like they're reversing this whole capital flow. They are taking out the first obvious edge on the upside. And if they can hold above it, we can certainly run it up here, test this upper edge of 115, maybe here, head up to the attractor at 116. And if that happens, the yield starts coming down. I think that's going to be helpful for the markets, the small and mid cap stocks. So look at the buy weakness on the bonds down here to the 113.10, 113s. These are the two levels below the 113s. I'm going to be taking off that long bias and going back range bound. So fairly aggressive on the bonds as well. They've been up here a few times, time to flirt with this 113 level. They finally had made a good progress above it. So this could be a breakout we're looking at. We'll see. But to get started trading that from the long side, let's see how far they can take it on the upside. So looking to buy weakness, 113.10s, 113s for rotations back up. And now let's see how far they can take it. And if they're back below that, I mean, we're just back range bound again, back in that lower range again. On the Nasdaq, here we have some potential. That's the one been moving like crazy. So they had a lot of movements on the Nasdaq on the way up. I'm gonna fold this stuff back together like this, give you a better picture of what that looks like. It looks a little cluttered on that side. All the stuff behind us now. You can see how clear that edge is, that 21,800 edge. If they can take that out, we are back in action. We are going to be heading back up towards the highs again. So this whole edge on the upside could be retraced, and we can see new highs pretty darn quick. How to get past this edge though? And right now we are trading in this range. Support being down here at the 21,170s, resistance up to the 21,800s. And between 7 and 800s is where we get pretty good resistance. And we are right up here against these areas right now. So at this point, I would be looking for short setups against 35s, 75s, the 850s maybe. That would be right up here. That would be starting to take out the edge. So watch these three areas. If they take out the 78s, what is it? 21, 780s to 800s. Definitely potential long breakout trade up to the 850s. But then again, I would be a little bit, I mean, you can probably see a pretty good probe to the upside here, and I would be cautious about that. You're going to need a little bit more confirmation. But yeah, I would be inclined to hop on a long trade there. I mean, if they break out to this edge and it looks like there's a little bit of volume behind it, maybe be worth a shot. But just be mindful, you're right up here against an upper edge. So there's no, if this starts going against you, there's no point of sitting in a shitty trade, put it that way. So just stop yourself out if it starts going against you, and if you try a long trade on that one. And but at this point, definitely range bound. I would start off with a bias to the upside, given the overnight pullback and the retracement. So looking to buy against the 640s and the 600s for rotations back up. Below that London low, that's taking off the long bias and going back range bound. I think we are staying range bound at that point. And range bound and the Nasdaq could be pretty good movements as well. Yes, it could be running it all the way down to the 21,200s here and right up here to the 21,800. So there's a lot of range on the Nasdaq to work with. So there's both long and short setups, but I would favor the long side at this point. Now I'm actually currently down $47 on two trades on the Nasdaq in yesterday's trading. I had what was that? Let me see if I have those. No, that's not it. The trades I took, yeah, let me see, where are they? 5. That was the open. Here they are. So I tried a long trade on that kind of funny bar. They took it lower than higher. I had a nice trade going there, and then the reverse it stopped me out. And I tried another long trade after that, and that kind of got me, and then I didn't do much more. So that was a couple of trades I did yesterday on NASDAQ. So, and since it's yesterday's trading day is the same as today, it's just staying on there. So that's the NASDAQ. I got a little deficit to start on that one. Finally, oil and gold. On oil, that's the one I'm hopeful for. They're gonna do something on that guy, at least on the downside. So oil at this point, they did a bunch of executive orders, and they are definitely opening up oil and drilling and everything, and they declared an emergency, energy emergency. I think that's all great stuff in terms of changing this. So you can see, I would expect oil to start coming down just on that news. Question is just how far, but I think I would be trading it from the short side at this point. They're going to sell strength, 75, 80s, 76, 20s, 76, 60s for rotations back down. If they trade above the 76, 60s, I think I'll take off the short bias and go back range bound on that one. But I'm going to be looking at oil at least in the near term from the short side. And any rallies would be more supply oriented, and it could be hurdles in between here, which causes that to happen. But given the policy changes, and then they just open up Alaska for energy exploration again, they did a bunch of stuff. especially that energy emergency is going to be a big driver on oil to the downside. But as you know, nothing goes straight down. So just take it with a grain of salt, and just I would favor the short side at least for in the short term here. And then looking at the gold, I had a gold. No, but did I have a gold trade? I had oil. I had an oil trade up $15 in an oil trade here on 2 contracts yesterday. So they tried a short trade, and they ended up kind of going sideways and back and forth. So I just got $15 out of it. So I'm up a little bit on oil, but that's what I'm going to be looking at potentially trading at from the primarily from the short side. So that's what I'm looking for. But as always, just be very, very cautious about be mindful, because it just doesn't go straight down. There's so many different cross currents going on there that you just had to be cautious about it. And on gold, a few more days before we roll to the April expiration, but you can see we're right up here against this upper attractor at 27.50, and I think we're just stuck. We're going to be stuck between these two edges right now, unless they take out this upper edge, the 60s. So they start taking out this upper edge at 27.60s. I would lean in on the long side and see how far they can take it. But as I said, gold is going to be sensitive to these new policies for sure. If they can get the dollar and the currency and the fiscal stuff under control, I think gold may actually be retreating a bit. In other words, the fear of the US dollar totally getting eroded is it's going to put people back into US assets again and get out of oil, out of gold. So that's another one which doesn't happen right overnight. But once they start getting a handle of the fiscal stuff, I think gold is going to be under the pressure to the downside as well. We'll see. At this point, though, they're trading around this 27.50 attractor, so I would be looking at the move up here, starting off from the long side to see if they can retest these highs, potentially take it higher. If they can't take out the highs, I would be looking for a potential retracement right and trade around the 27.50s. So as they trade higher, looking for short setups probably at the 27.54 and the 58s. Looking to buy against the 36s and the 29s. If they trade below that edge right there, the 24s, that volume edge, so below the 23, 24, that would be the overnight low here. I would be looking at the retracement trade right back here to that low at 26.70. So that could be nice retracement to the downside. So that's for the two attractors. So we'll see what goes on with that. But I mean, I'm more inclined to see them more inclined to think they're going to run up here to the 27.50 and probably stay range bound, at least for in the short term. But we'll see. The way you trade it right now, from the long side to see if they retest these highs. It watched the potential shorts against the 54 and the 58 for rotations to that 50s. And if 58 comes out, I just lean in on the long side at that point, and we can head higher at that point. So that would be still, the faith in that US dollar is probably not there just yet at that point. All right, so that's oil and gold. Back to the ES, and that's kind of still holding where we left it. So modestly optimistic, like I mean, we see a bit of a rally today. We'll see. See if we post-inauguration rally or not. But as I said, they are right at this edge. So if they trade below that 38 to 40 support area, I'm taking off that long bias. But initially, I'm starting from that side. So we'll see what happens, guys. So not much news to drive the market today. So it's going to be all about the cross currents and the expectations and all that stuff getting priced into the market. So good trading, guys. We'll see you back at 11:30 for the next update. Right, later.